music to get us going on this St. Paddy's Day. The government's about to release the fresh report on inflation, the producer price index on the way. Rick Santelli's out of town. So Kevin Ferry is going to be bringing us the data, and Larry Levin of secretsoftrainers.com. Also join us from the CME group. Steve Leisman's here on set. Douglas Holtz-Aiken, our guest host. Happy St. Paddy's Day, Kevin, and how about those numbers?
Cheers. All right, there's a couple seconds. Down 0.6 on the whole number month over month, but ex-food and energy right on the expectation, up 0.1. So it's actually a pretty good number for the Fed to stay where they did. Year over year, 4.4, core 1% year over year, Carl. So pretty good on the core numbers. The main number much lower than expected. Bond market marginally higher on that. Not a great reaction.
All right. Thanks, Kevin. Let's get more reaction from Larry Levin and Steve Leisman. You've got a computer in front of you, Steve. Is anything else in there?
Yeah. What I'm seeing, Joe, is that the top line number, the headline number, was dramatically influenced by a decline in energy costs in the month. You had gasoline down 7.4%, heating oil down 5.6%. Even tobacco products were down as well. Passenger cars were up a little bit. The way we look at this every month is we look up the chain. We look at the chain of production, and you don't see a whole lot of inflation up the chain. Let me just make sure I'm looking at the right numbers. I am. And what you see here is looking at intermediate goods, taking out food and energy. There is some inflation, 0.9, but looking up at the crude goods, not oil, but unprocessed goods, minus 0.9% less, 0.6% less food and energy. So there's not a whole lot of inflation in the producer's pipeline here. And in any event, if there were, it doesn't, in a competitive environment, in a recessionary environment, doesn't necessarily feed along to inflation. So my bottom line is the same that Kevin had with much less data, was it gives the Fed a little leeway on inflation here.
And that was Carl's point earlier, too, that this is the statistic you used earlier. This is the first time that we've seen 2 quarters.
Or quarter-on-quarter decline. Right? In CPI would be the first time in 50 years.
On the core rate, right?
If we get,
is it the headline rate? I don't think it's the headline rate, is it?
I don't know if it's
I got to check that. That's a good little fun little fact.
Yeah. It's the core rate.
But in any event, it all adds up to what you guys are talking about.
Right.
It gives the Fed some room to not worry about raising things anytime soon. Go ahead, Kevin.
Watch the gasoline component, though. Gasoline up to $3 a gallon in Chicago already. So if that was a factor on the downside, it'll be going away in the next month anyway. So gas is high volatility. Obviously, the Fed tries to keep it out of there speaking, but gas at $3 is really the cut rate for people, especially on consumer confidence level.
All right. Kevin?
Larry Levin, are we going to leave 11.50 in the rearview mirror now? Nothing here that means we're not, I guess, right?
Yeah, absolutely, Joe. We already traded up to 11.60 in the futures overnight. I think 1,200's within maybe 2 weeks away. Certainly sometime in April we'll trade 1,200. I wouldn't be surprised at all. Even if we pull back.
Larry.
What's that?
I need 12.50.
We could be at 12.50 by the end of April, Joe.
Oh, that's that. I lose then, right, Carl? Can we do the year in thirds instead of quarters?
Oh, sure. I will give you that.
All right, but you figure in 2 weeks, though, we could be up another. We could be somewhere around 1,200, Larry.
Absolutely. Any piece of bad news over the last 6-8 weeks or so has just been a buying opportunity. I don't see why that won't continue. You know how I feel about it, Joe. It's propping up by the government, but whatever it is, it's driving this market higher. 12.50, 6-8 weeks away. I wouldn't be surprised at all if we're talking about 1,300.
What do you mean propping up? We don't really need to prop it up, Larry. We just need to reflate, and then all assets go up.
Okay, well, they got a lot of tools they're using. Whether you like them or not, whether Rick likes them or not, whether Steve likes them or not, it doesn't really matter. The market is doing what it's doing. I play by where the trend is. That trend is higher. Any kind of piece of bad news, that Greece situation, anything at all that looks bad is a buying opportunity. I don't think that's going to stop anytime soon.
We've got nowhere in 10 years, and you still don't think it makes any sense, Larry. Are you sure?
That it makes any sense?
Yeah, we've got you think it's held up by artificially, like there's an air pocket under a Dow at 10,000 when we've got nowhere in 10 years.
Didn't take us long to go down when all those banks needed to be bailed out, did it?
I know, but all the nifty 50 bubble we had in 1999, all those companies have tripled their earnings and they're at the same price.
Yeah, I mean, you know, the market moves away. The economy and these markets don't always connect. I mean, I think this today and where we are right now is a perfect example of that.
Well, we got a lot more right to be here now than we did 10 years ago.
Well, that may be true, but
Are you saying this then?
You got to admit, Joe, there's just a huge amount of problems out there that, you know, just really are not being addressed.
There always is, isn't there?
That's true, but right now there's quite a few. Wouldn't take you long to list them.
I just decided to take that side for a couple minutes. Anyway, I'm worried about how loose money is. I thought, you know, a couple of days ago I was saying I'm gelling with Yellen. We can't let the good times roll.
You have no moral compass.
Zero. It is St. Patrick's Day. That's something.
It is. Well, now I'm worried that we were showing a four-leaf clover for St. Patrick, and it clearly should be shamrock because it was meant to be the Trinity. So we've messed that up, and we're playing Scottish music. So we got a lot of problems today. Anyway, guys, thanks Kevin, Larry, and Steve. Right?
Take care.
Yes.
But we're playing Scottish bagpipe music, and we're putting up a four-leaf clover instead of a shamrock.
Sorry.
I mean, we tried.
We came in with the best intentions.
Green. We tried everything. I drank green beer before the show. I tried everything.
We did the river dance.
We did the river dance.